Hey guys, bear with me for a second. Some microphone issues. It was working fine when I tested it earlier, so bear with me. If you can hear me, give me a thumbs up. I know you can't see me. My webcam also is not available, so I apologize. Thank you guys. Apologize for the late entry, late start. My computer decided to restart itself too. So all kinds of fun when you're in a whole new location and you're trying to do a webinar, but not like it's new to me. It's just getting things set up from scratch doesn't always work pan out on short notice, but we'll be okay. And we'll get started in a moment here. Let me make sure I share all the stuff I want to share with you, and we get going here. So, too much stuff here. That's what I wanted to do. Okay, so I won't be on camera today. My camera is in a piece of luggage and that I don't have access to just yet, so it'll be for next week. Although I did have the microphone, I was happy about that, but you're probably hearing me on the internal laptop microphone and the quality is not as good. So I apologize for that. And hopefully it's good enough for this week and an abbreviated session. And I can answer your questions, talk about the markets and what my thoughts are, and get into our trades. So forgive me for a little bit of last minute scrambling. I wanted to make sure I took care of you guys this week. And also it's the last week of tax busy season. So here we go. So let's take a look at things. And if I could get the screen to stay where I want it. Okay. So we're having a little bit of a pullback today, not surprising after many days of making new all-time highs, kind of giving back a lot from yesterday. You can see S&P 500 is down 0.5%, so is the Dow Jones, NASDAQ 0.6%. The smaller they are, the worse they're faring today, but over the last 5 days, you can see a lot of green here. Small caps still over the last 5 days are down, so is the Dow. But over the last month, everything's solidly positive except for mid caps. And of course, year to date, everything is in the green. Only consumer staples is behaving today up 22 basis points. And everything else is kind of in the red, with the worst of them being industrials and consumer discretionary. Even technology is doing better. But over the past month, consumer staples has been the loser. Basic materials down 2.33%. And real estate down 1.38%, but only consumer staple is down on a year-to-date basis. So anyway, that's kind of a big picture overview of what's happening in the markets. And then let's take a look at where we are in the charts. So here's my SPX chart, the tri-pane for those that are new. I do a multi-time frame analysis every day, every night, so I know where things stand. We have the daily on the left, the weekly in the middle, and the monthly on the right. And so starting off with the daily, you can see that we've had a bit of choppiness over the past week. We tried to go positive on Monday. Gave it back on Tuesday. Nice day yesterday, and we're giving it back today. And did we make a new all-time high in the pre-market? Yeah, it looks like we did make another new all-time high, getting to 67, 65 almost. So we're basically right in the middle of the options implied expected move. And so if you recall, actually you can't recall because there was no video this weekend. So implied move for this week was in 94 points. And if we look at where the week ended, which is right here on Friday, we closed at 67.15. And after all this week's action, we're up about 9 points on the week. So we're virtually unchanged. We've only used up, we've been up, we've been down, but we haven't threatened the upper edge of the expected move. And we haven't threatened the lower edge of the expected move down here in the green. So 66.21 is the lower edge. And what did we have? The 68, I'll call it 68.10 as the upper edge of the expected move. And if you take a look at, and let me see if I can make this a little bit bigger, the MACD, you can see that we're basically sideways. We're up. It looks like it's going to cross over. No, we're going to jump back up, and no, back down. So obviously the definition of choppiness. And if we look at the relative strength index of the RSI, 70 being an overbought level and coming down to 64. So we're getting away from the overbought level, but still we are definitely overbought on a daily time frame. Switching to the weekly, you can see that right now we are forming a bit of a doji on the weekly. So we went up, we made new all-time highs and kind of an indecision candle. MACD solidly positive. We are definitely overbought on an RSI basis, so at the 71 level. And so we could use a bit of a rest, and maybe we're seeing some of that and maybe not. This market is just, FOMO is in full effect for sure. For those who have not participated, this is kicking in. They're seeing all these profits being made, and people are definitely jumping in. If you look at the Investment Company Institute numbers for last week, definitely retail was plowing money into the markets last week, including a lot of money into gold, which we seem to have a bit of a reversal in gold today. On the monthly, MACD solidly positive, still overbought on the monthly. This is the slowest time frame, but here we are, 1, 2, 3, 4, 5, 6 months up in a row. And when you look at any of these charts, there's nothing bearish about them. So your only stance in this market is to be long or neutral. And I understand if you sold out a while ago, you got to look for a safe entry back in. This is a bull market, and being short a bull market can be very painful and can go on and last a lot longer than you or I would think, and a lot longer than we can stay solvent. So anyway, NDX, take a look at, if I can type. Yeah, the microphone says it's ready and it's going, it's connected, and the good mic, but it refuses to recognize it. So I'm not gonna try to restart. So hopefully the audio is okay. NDX, here we are. Not so much of a reversal candle on the NASDAQ. It was a really solid candle. It was kind of an uptrending day yesterday, and today we're just giving back a little bit. And you can also see kind of MACD is going sideways in a little bit choppy, coming away from the overbought level on the daily, and the NDX also forming a doji on the weekly. We did get into the space of last week's candle. We kind of trudged down to last week's candle, but we never stopped what I describe as one time framing. We never stopped one time framing. And one time framing on any time frame, whether it's the minute chart, the 5-minute chart, the 15, 30, hourly, means that the low of the one bar doesn't violate the low of the the previous bar. And if you're in a downtrend, it's just the opposite. The high of the bar never violates the high of the prior bar if you're going to continue one time framing in one direction. And that's what we've been doing on the indices. Look at this one, two, three, four, five, six, 7 green candles. We are due for a rest, guys, but who knows when and if we're going to get it. These things go on a lot longer than we expect, and you just have to take advantage of the pullbacks when they happen. And bull markets are hard to kill. They're not easily they don't easily give up. And I can see that with a lot of portfolio managers underinvested, there is a chase into year end. MACD solidly positive on the monthly, obviously, and it's definitely overbought on the RSI level. So nothing about this is bearish. Take a look at the laggard rut or the small caps. We have again green, red, green, red. We made a new all-time high earlier this week, 2501.92, but definitely not showing the robustness of the NDX and the SPX. So what is different about the rut is that the MACD is a bit negative. We have the fast line, the blue line here, below the signal line. So that is a little bit of different character than the rest. You can see that the relative strength is down at the 58 level, not in the 60s like the NDX and the SPX. And then here, it's not so much of a doji candle on the weekly as much as of a red candle, but still, we're not one time frame. We haven't stopped one time framing to the upside. So that's a good news. And, if you draw a trend line, you can see that, it has not violated the uptrend line here. So I'm not a big trend line trader. I believe in them. I believe that a lot of people use them, and they do definitely count for something. But you can definitely see that every time it comes down to that trend line, it's being bought and supported on the weekly. Same here on the monthly. 1, 2, 3, 4, 5, 6 months to the upside. We are in the middle of our options implied expected range here for the Russell, and the MACD is definitely positive here, and we are not overbought on the monthly. We're not overbought on the weekly, and we're not overbought on the daily. So what seems to happen is that the rut is down 80 basis points today. When the market goes up, the small caps go up with it. But when the market comes down, the rut is the leader on the downside. And we need that to change to see that small caps are going to carry the baton. Because remember, S&P, that's 500 stocks. NASDAQ, essentially 100 stocks. And then the Russell is 2,000 stocks. So if you want breadth to really get solid, you need the Russell 2000, the small caps, to take on the leadership role. Now let's take a look at the VIX, and a couple interesting things here. You can see here, we go back to September 26th, where we put in the low, it was at 1529. And look at this MACD on on the daily VIX. I'm gonna because I don't really care about the weekly and the monthly, because it hasn't done anything. And I apologize if this is a little bit messy, but you can see choppiness in the daily, but the MACD is solidly positive and has been since the fast line, the blue line, crossed over the signal line, and you can see here. And if you haven't figured it out by now, then I'm a big believer in the MACD indicator. And although it's not the end all and be all, and it does lag price, of course. It does help me stay on the right side of the trade and know what to expect if we put on a trade and we have either a positive or a negative MACD. And we are definitely above the zero line here. And we never really got below 15 here, even though we keep making all-time high after all-time high. And that's, I don't want to say troubling to me, but that's unusual. And something tells me that there's a lot of hedging going on in the background here. And so we are at the 16, 17 level. And it wouldn't take a whole lot for us to get to the 19, 20 level if this market definitely wants to pull back into the back half of October, which tends to be less favorable than the front half. We have options expiration, monthly options expiration next week. That's usually a kind of a mixed bag, but usually after that, we do see some weakness into the second half of October. And what starts happening in October is tax loss selling, mutual funds, portfolio managers want to take advantage. They have a lot of capital gains. They want to offset them with some of their losses. So all these weak stocks into year to date tend to continue to see some selling pressure. And for a lot of them, the selling pressure doesn't let up until the turn of the calendar year. So be careful. A stock that's been down all year long could face tax loss selling. And so before you take a flyer on something, just keep that in mind. And it's not a hard and fast rule. Nothing in trading is, but you want to be able to know that a lot of tax loss selling can affect these stocks that have been losers all year long. Let's take a switch here, and I'm going to put up and bring up the VIX contracts, because something I noticed about the VIX contracts. Now we have a VIX futures. You're seeing here all the VIX futures contracts. Now they're not all active. The one that's active right now expires in 13 days. And I'm going to switch a little bit here. I'm going to take you to the VIX, and you'll notice that that VIX contract corresponds with this VIX monthly expiration, which occurs in about 12 days. And so if we take a look at the spot VIX, which is at 1688, and then usually what you see over time is the futures that are corresponding with the spot VIX that we just looked at is a lot closer than they are now. So 1688 for the spot VIX. Um, I don't know, Thinkorswim lost the signal. If you guys can still hear me, give me a little thumbs up. I don't know if I lost internet or what. Okay. Okay, it was just Thinkorswim. Thank you guys. Thank you. I lost data for a couple of seconds. I could see it lagging. All right. So that's one thing. And now if you look out to the next tradable VIX contract, which expires in November, those are at 19. The next one is at 1995 in December. January 20.86. And this is a normal contango arrangement of VIX, meaning that when you go out further in time, you expect uncertainty to be higher, and therefore the VIX to be higher. So this is normal contango. what happens when we have short-term VIX spiking above the futures contracts, it means that people are seeing the immediate risk higher than the futures month's risk, and that's when people start getting a little bit crazy and selling stuff and dumping stuff because or trying to take profits on stuff. And that's what's called backwardation, and that's when we get 3, 4 days of selling of 1% or 2%, 3% down. If you guys can think back and remember those days when we had them. And although we've had somewhat of two-way markets, this has kind of been essentially a one-way market up. So what I'm saying in all of this is that, first of all, the divergence between the spot VIX and the VIX futures is wider than normal. And then if we look at the futures VIX, all right, so into November, we're expecting the VIX to be 19. Not unusual, but more than I thought it would be. And into year end, we're expecting a 20 VIX. Obviously, a lot can change between now and 69 days, but something interesting to note. If I go back to the VIX, and you know what I like to do, let's take a look at the pricing of the calls versus the puts. And so let's call it, we're at 17. And if you're bearish on the market, you're going to buy VIX calls. And those are the 18 calls. And those are going to cost you about $1.10 for the calls. And if you're bullish on the market, you want to sell the VIX, or you maybe want to buy puts on it. And that would be the 16 puts. And so you can see that the calls are about 5 times as much as the puts, which skews the risk to the downside for the market. So, and 5 times isn't a dramatic amount. We've seen 10, 15, 20, even 30 times. So it's not like they're going crazy buying protection. But let's take a look just for fun at the November expiration. That's the next monthly expiration. And if we look at the 18s in November, those are about 275 a piece versus 44 cents. So call it 5, 6 times. Yeah, so just about the same. So the edge here goes to the bears on the market. Although, again, this is one data point and it's not a strong edge. And we got to combine it with everything else let's talk about. And then one other thing I like to take a look at is the VVIX, and the VVIX is the volatility of the volatility. And despite today's sell-off, we can't even get over the 100 level where we start to take notice. 110 is where there's really serious institutional hedging going on, but under 100, kind of yawn. So I'm not seeing anything here that tells me that we're in for a big protracted sell-off. Could we get a 2 to 3% pullback? Sure. But it just seems like there's a lot of portfolio managers that are taking advantage of any dip to buy into this market. So by the way, as I mentioned last week, I'm not going to have a tutorial, but I'll pause here and just actually show you one more thing that I had brought up. And then I'll take some questions. Just to kind of look at what we've got coming for tomorrow. I guess today we still have a few Fed heads, Michelle Bowman talking, Fed balance sheet, who's not waiting for that? Mary Daly, 6:40, more Fed head speak. And then Austin Goolsbee at 9:45. And consumer sentiment at 10. Baker Hughes rig count, big deal, and then another Fed head. We have some type of treasury statement at 2 p.m. So no jobless claims today. Says here that Jerome Powell was speaking this morning. I didn't even realize that. I was still on a airplane getting here. So in any case, not much consumer sentiment could be considered kind of a red star event, but let's take a look at what's the options implied expected move into tomorrow. And Thinkorswim is waiting for data. All right, so uh, we started the week with 90 plus or minus 94 points. And no, that's today. Sorry. Tomorrow is the 10th. I was like, no, that doesn't look right. We have 46 points into tomorrow. That's almost half the entire options implied expected move into the last day of the week. And funny how that happens, even though there isn't any strong reports. And obviously, the Senate is voting on a spending bill, and so far it hasn't passed, but market hasn't cared about the government shutdown. I think if it gets prolonged, then the market will start to care because it does affect spending and can have an ultimate effect on GDP. So 46 points, I'd be a buyer of that, not a seller of it, definitely not. And somebody was asking about doing a kind of a butterfly into the week in terms of bearishness. And I certainly wouldn't do this now with the S&P down 29 points. You want to do this stuff, guys, when the market is up and the SPY is not $2.91. And if you want to take a cheap shot on something into weekend, you want to do it short term. You don't want to go out several weeks. You want a butterfly because it takes a long time for the butterfly to expand to full value. So what you want to do, and something I suggested is, okay, let's take a look at the options implied expected move into tomorrow. Well, that's $4.72. Let's call it $5. All right. And you think the market could sell off further into tomorrow. So we're at 670, and 665 would be where we would expect the market to settle out at it if it heads to the downside. Of course, it could be at 675 tomorrow. And in this market, I got to say, it's more likely than not, it'll be to the upside, not the downside. We just haven't been able to string 2 down days in a row. So if I were wanting to take a cheap shot into tomorrow, obviously I can buy a put, and I could wait until tomorrow morning. And if the market's up a few bucks, take a shot, buy an at the money or in the money put, like we talked about in the weekly options training. So let's say you bought the 670 put and then sold 2 of the 665s. A butterfly play is buying 1 option, selling 2, and then buying 1 to cap your risk. So it looks like this. This is what we call a balanced butterfly. It's a 5-point butterfly. And why did I pick 665 as my midpoint where I'm going to sell to? Because if we look at the delta at 665, it's where there's a 68.3% probability of the market going tomorrow and then reversing. And if we look at the deltas, it's about a 22 delta, 19 to 22 delta. That tells me that that's where any move to the downside might terminate on a normal basis. And so we're basically selling twice of the 665s and 1 of the 660s to cap our risk. And if I do a confirm and send here, and I'll bring that right to the middle here. So you're going to spend 75 bucks, let's call it, on this thing. And you are going to have a maximum possibility of making $424. Where do you make that $424 or $425? Well, if the SPY does exactly as expected and it closes at 665. So you take a cheap shot and you're going to make 5.5 times your money. And so that's doing it. If you think that the market has a possibility, and I'm going to have a whole class on butterflies, guys, but I just wanted, for the benefit of those who wanted to do something like this, I'm going to talk about unbalanced butterflies, broken butterflies. That's going to be a whole series of classes that I'm going to do for you guys. Just know that this is a straight butterfly, and you want to do it either on October 10th if you're thinking volatility is immediately. And I generally do not do butterflies more than 10 days out. And obviously, we have expirations all the way out, because the longer the time you give that butterfly, the more time it's going to take for that middle strike, the 665s, to decay and to give you the benefit and have that butterfly expand into the width that you need it to take it off profitably. So if I were doing a butterfly, I wouldn't take anything past next the 17th of October. And one of the things I want to point out also, probably spent more time on this than I had intended to, but hopefully you guys find this helpful. Whoops, I don't want October 17th. I want to look at tomorrow. And I take shots like this every once in a while. I'll just put one or two on and see what happens. And I might lose doing this 4 or 5 times, but the sixth time when I hit it, I make all my money back and then some. So a cheap shot when you think the odds are in your favor are good. But remember, to make the 5 or 6 times your money, when it comes to options, the higher the reward, the lower probability. And what is the probability of getting to 665 tomorrow? Well, that's 23%. So your probability of getting full profit on this is 23%. But if you do get there, it's a pretty nice profit. That doesn't mean you can't make money if this thing only goes down to 667 or 666. And the longer that you wait in the day, that it doesn't go down to the 665s, the more these are going to decay. And assuming that the market doesn't strain to the upside, let's say it hangs out around 668, 66, 67, 666, you're going to make some decent money on it. You're not going to make the largest profit you can. But the other thing to keep in mind with the butterfly is, once the SPY sinks below 665, remember what a butterfly is you're long a put spread. In this case, we're using puts, could be a call spread. And then you're also short another put spread. So as you sink down towards that 660 strike, all the profits you made from 670 to 665 are given back, because now you owe the profits from 665 to 660. So if the SPY were to go all the way down to 660 and close there tomorrow, you'd be basically out your 75 cents, no more. You wouldn't take any profits. And but you would basically, that lottery ticket would have expired worthless. Okay, let me look at some questions and see if I've put everybody to sleep. So Q&A. All right, slight audio feedback seems fixed. Thank you, Joe. I ought to figure out how to put this up there so I can see these as they come in. No camera is fine. Yeah, who wants to see my mug anyway? More screen space for share screens. Yeah. Yeah, it's just, if it's a live webinar, some people like to see. Ka is asking, and hopefully I'm pronouncing your name right. Caso's up pretty solidly today. Would you look into close out our bull put spreads to 900, 875, or hold on into next week to squeeze out some more? Good question. Let's take a look at that. We are going to get to our trades, but we have the October 17. Get out of my way. Costco. So 900 875. So um, we buy those back and we're down to about a buck 22. So it still has a decent profit. And I'll tell you why I wouldn't roll these today because the 900s are now a 12 delta, which means there's a 12% chance that these will close in the money. And which also means you always have to remember there's a 2 times as likely to revisit this area or a 24% chance, which is still, or now it's a 14 delta, 28% chance that we might revisit it, only a 14% chance of closing below it. So while we could roll it, I'd rather wait for a weekday between now and then to do that roll. We've kind of gotten past the hump. And so, just for your own edification, if we were to buy the 900s, sell the 875s, and let's say I want to go out because Costco options are not that liquid. I want to go out to November, and if I want to do the same thing, uh, that is a 27 delta. I might adjust down a little bit, give myself a little bit more room. What is the implied move? 56 bucks into November monthly. So 934 minus, say 935 minus 55. So that's about 880. 880 would be the one standard deviation, which is correct. It's a 19 to 20 delta. So let's say we did, let's see where the open interest is. Not great. Best open interest is at 880. But all of these, are within the realm of normalcy spread wise. So I would go with an 890s, gives us about 10 more bucks of potential downside. And if we want to do the same with 80, 70, 65. So we pick up $2.92 by doing that roll. Now, I want you to keep that number in mind and see how it compares to when I ultimately roll it. Now, if Costco continues to rally, then we may get something less. But I think we're going to wrestle with the 21 EMA here, and then the 50-day, the blue line up here, which you probably can't see very well. But in any case, I'm going to wait, and I'm going to try to do this on a down day for Costco. When you're rolling puts, you want to do it with the wind at your back, and the wind is at your back when it's going down. Same for calls, but calls, and it depends on whether your calls are in the money or out of the money when you want to roll them, but that's a discussion for another day. So, done. And that's done. Okay. I'm short the Ethereum October 17, 30 quotes. Would you say we just roll these out to November? I think we rolled them out to November already. So let me just double check. Open option trades. Yeah, we rolled these earlier this week, or if not last week. When did we do it? Open on the 7th. So 2 days ago, we rolled those already to the 30s. So if you haven't done so, let's take a look at them right now. ETHA. Still probably a good day to roll them. So buy to close, go to the Novembers, still go with the 30s. Now this is a 31 delta. So a little bit more risky, but you collect $1.55, and so not bad. And if you if you hadn't done it, you want to take a little bit risk. You want to go. What is the options implied expected move? About $7.40 from 32. Wow, that's all the way down to 25. I wouldn't do that. So with a volatile underlying like Ethereum, you can go out to the 22 or 28 delta, 22 or 18 delta to give yourself more room. But the implied move is not jiving with an 18 to 22 delta like it normally would because of it's such a volatile instrument. And if we take a look at the IV percentile, that's what I look to measure how relatively volatile this is. So just because you look at each of these weeks and you see 91% volatility, 78, 72, and then you open up the strikes and each strike has its own implied volatility. What the IV percentile tells you is at 90%, this is saying that volatility in ETHA over its history has never been higher than this except for 10% of the time. So, which means that anything over really 20% I consider volatile. And this one is basically almost at its max, the highest volatility it's traded at. So you're getting a lot of premium for the rolls because of the high IV and the percentile, which also means that there's higher risk. So if you haven't done that, you want to do it today, I'm good with that. We sold it. We rolled it, and what I've been doing, just for you guys' knowledge, is I'm trying to figure out the best way for you guys to really figure out what's going on in this option trade list. And when we close out an option, even if we roll it, I'm closing out the old and starting a new one so that the P&L stands on its own, even though we're kind of continuing the trade. So if we were profitable on the option, we'll just close out that one and start a new one. But if we had to roll because we were deep in the money, had an unrealized loss, then I'll just continue that trade. But in the case of Ethereum, we were profitable on it and I started a whole new trade. So we sold ours for $1.24. So you are probably you're going to get more money for this rolling it today. And in fact, you're going to get about $1.90 if you roll them to the 38s, but $1.54 on the roll itself. Hopefully that helps. Questions? Audio went silent. Okay. 7:52. So yeah, sorry about that, guys. Like I said, I think I lost my connection. Things will be better next week. I'll have a week to get my act together. Just so you guys know, there will not be a video this weekend. I can tell you for sure, based on the circumstances I'm in, and the fact that it's the last week of tax season. So I'm juggling a lot of stuff. Andy will likely have a video for you guys. So I apologize. I had planned on not having a video this weekend because it is the last few days of tax season and I'm spending it chasing clients for their last minute documents to get me so I can complete their tax returns. I have about a dozen until to go out by Tuesday, but we'll have a full webinar next week and then resume our weekly videos. So I appreciate your understanding on that. Let's take a look and spin through our trades and then call it a webinar. So, and then if you still have some questions, feel free to jot them in. And raise your hand if you can't hear me. Obviously you can. I'm just being silly. Where is my option trades? Okay. Sort these. So we have about 21 trades. Start out sizing these perfectly so that I don't waste time resizing during the webinar and that never holds. I just want to see the target. Okay. Split screen. Okay. Costco. What are we looking at here? So something doesn't look right about this. Usually have a dual thing. I must have switched. There we go. Something was not right. All right. Telling you guys, you're not getting the best of me today. All right. So Costco, look, we're getting a bit of a doji here. We're up 20 bucks. That's really nice. And I have no worries about Costco. And frankly, guys, when you see a sell-off like that, if you have an IRA, you have long-term, you know, Costco's not going anywhere, and it's the finest retailer in the country, if not the world. And they're just making money hand over fist. And so you see a 50, 60, $70 sell-off in Costco, buy some shares, tuck them away. A lot of people think they're expensive, but I think they're more recession proof than any other retailer. Just a personal opinion, not a professional recommendation, even though I am an investment advisor. All right, enough of that nonsense. We have the 908.75 put spreads, as one of our members pointed out. We're up 72%. So at this point, you should be at least out of half of them at $1.50. So I get to mark that today as that target being met. And then sometime over the next week, we'll do a roll out to November for sure, and we'll figure out the right strike. So Costco, nice recovery. Was looking kind of iffy, but I don't think we ever violated our short strike, right? The lowest we came 903.29 on September 29th. How close? 903.88 on the 7th. So yeah, I mean, but we never really hit our short 900 strike. Ethereum, I would thought that it would have more strength than this, and especially yesterday with the cryptos up, but still nothing to be concerned about. We have two plays on Ethereum. We have a long a short put, which is now the November 30th. MACD is threatening to flip negative on here. But we are at the 50-day. You can kind of barely see this blue line here. And so looks like it's trying to hold the 50-day and bullish PSAR, bullish chandelier. I still think there's upside in Ethereum. I'm holding on to it. I have the calls and I have the puts sold, and I think I even have some shares of ETHA. Our call spread is in January. We've taken one profit target out of this. We're at about 50%. We're back at about 32% profit, but again, not worried about this. It's a long-term play. Ethereum still looking good, holding the 50-day. I'm no Scott when it comes to crypto, but I basically dabble in Bitcoin and Ethereum. Those are the only two, and cryptocurrencies trade very technically. So GEV, we put this on a couple of days ago, and we are already taking our half profits. If you didn't take them yesterday, you should take them now. We sold this very short-term spread for $2.84, and we're up 63.38%. Ignore this percentage. We're working on getting those interim percentages corrected. But yeah, this one worked out really quick for us. and we'll give it more time to um, uh, decay the rest of this premium. And GEV, make no mistake, it can be a volatile animal, so be careful with it. Now, here's our staples play. Spam for those of you, or Mel. We're down on this combo play. We bought the 25 calls and we sold the 23 puts. The 23 puts are obviously still out of the money, but that's out in 2027. So you can see, like, on the dates today where everything is kind of selling off, the staples is the sole survivor, although Hormel is not exactly participating or screaming to the upside today. But you know, it's kind of disconcerting to see 1, 2, 3, 4, 5, 6, 7 down days in a row, but they're small down days, and only here did you see an acceleration in volume. And this is a 2027 long-term play, guys. And I think the ex-dividend date passed. No, that's coming up. So if any of you have the know you're going to hold on to this and would rather own the stock rather than the options, then what you can come do here is trade your long calls for options, and here's what you would do. And that way you can collect the whopping 29-cent dividend. That's $29 per 100. So you could come here and in Thinkorswim, you can say buy a covered stock, and that should form an order. Come on. There we go. So you would sell that call, even though it's a loss on the call, then you're substituting stock for it, and you would pay 21.27 for the shares. And then if you do this on the 13th, by the 13th, then you'll collect that 29-cent dividend, or $29 on 100 shares. So if you like to hold on to this dividend paying stock. And this is, again, a long-term play that we have for Hormel. And I think that there are some nice profits to be made for those that are patient enough to wait and see this one head back up again, because they will head back up. Intel, go back to the chart here. Nice moves. 52 weeks highs. Doji today, nothing much going on. We've taken one profit target. We're waiting on our second profit target. We're at $3.47. Not sure we got to the $4 mark, but still looking good. This is a play. We sold a put to finance a call, and yeah, it's acting well, and we'll see what comes. Earnings, do I have an earnings date on here? October 31st. Let's see if this solidified it. Yeah, October 23rd after market close is when earnings. So we'll do something with this on or before the earnings date. Johnson & Johnson was kind of looking a bit iffy. Let me make sure that I have my chart where it should be. All right, so our next profit target is $9.50. We have the combo play where we bought the bring this up and not mistake it. We bought the 180 calls, and then we sold the 175, 165 put spread. So now they're pricing out at, wow, I guess we made our next profit target on it. I didn't even realize it. So we need to put that alert. So you need to take the next profit target if you're still in these. Wow, $11.57. So nice result here. Yesterday it was kind of looking iffy. It was starting to sink a bit. I was like a little bit disappointed when I was looking at it at the airport. And now we hit our next profit target. So we have earnings coming up on this one. when? Next week on the 14th. So we'll be closing this before earnings. It'll be your choice whether to take any of this into earnings. What I do suggest, if you're still holding these, and this is just an idea, if you're still holding the 180 calls, they're deep in the money. And whatever you have left, and if you want to continue to participate, I'd be inclined to roll them up to the 190s today. For the rest of them that you don't take off as profit and harvest $7. One never knows what happens, because that's what I'm going to do with mine, and take only $3.50 risk into next week. This has been a nice trade, but for the most part, the 185, 180, 175, the 175, 165. Yeah, I'm gonna recommend that you close that. So buy, sell. I mean, for a 10-cent debit, I'm gonna put out an order to close this put spread. No sense in taking that risk, because you just never know what news comes out of the blue. And for 10 cents, it's not worth it. So we'll close. I'm gonna suggest that we close that put spread. Now, the J&J covered call, if you're still in it, the 170 call, you're going to have earnings next week, and you could close it, or you could wait until Friday if you don't want to roll it out. So what you could do, if you still want to participate and you haven't rolled it out, you can take these 170 calls, and depending on what you want to do, you can roll them to the 170s in November and collect a buck. You can go out to January, and if you want to go at the money, nope. Let me try this again. So we did this before, guys. So if I want to take these from the 170s and I want to roll them to at the money for little or no debit, yeah, at this point it's too far deep in the money. You're not going to be able to do that. I have to go out probably to January 27 to do this. Even if I did that, still cost me a 247 debit. Yeah. So you can roll up and out, or you can just have them assigned if you want out of this position. But for the most part, we will have made our dividend. And if you want to stick with the position and the same amount of risk, you can roll it out to the 170s anytime over the next week. After Friday, if you leave that in your account, they'll just assign the call and take away the shares, and you're done. But I think we got in at a good price point, and some nice, yeah, it's a small profit when you can $30 dividend. And at the time, what did we buy this for? We bought it for 168.55. So we knew that our max profit would be only about $275. And if you hold into expiration, that's what you'll realize, minus commissions, of course. All right, enough for J&J. Meta finally recovering, but we are still 10% down. Again, this one was a little bit of a hairy day on the 6th of October, and we dipped all the way down to 690. And as I reminded one member, I pay no attention to intraday nonsense. I always rely on closing stops. The only time I use an intraday stop is sometimes with these things, especially the long swing plays, is if it violates my stop during the day and it closes below my stop during the day, then the next day, I may, if I want to give the stock a chance, I will turn that closing stop the next day to an intraday stop. If I violate the prior day's low, then I'm out, especially if I want to give it a chance. But usually, once I violate my closing stop, I'm out either that day or the next day. But sometimes I will instruct you to hold on and and only sell it if it violates the stop intraday, then get out intraday. Hopefully I have not confused you more than I intend to, which I did not. But Meta looking good. We're down 10%. We've been underwater on this one. Meta finally recovering about 40 points from the lows, so not bad. I would have expected it to. We have earnings on this one, but this expires before earnings. I think we have earnings the week of Halloween, I think. So well, we can kind of determine it. October 31st. Yeah, look at so it's got to be the week of Halloween sometime. And I guess if I just look on the system, 10/29. So many ways to determine it, but you can see the jump in implied volatility from 34% to 51%. You know, earnings or some event is planned for that date. So once you get the spread down to $1.25, take off a third to a half of them and let the rest ride. But last 5 or 6 days, unless we violate the $700 level, we should walk away from this one profitably. Microsoft, beauty, but not so much today. So look at this green, red, and we've taken 3 profit targets. We have a custom, basically, we bought a vertical spread 510, 540. So we're somewhere in the middle of that, and we sold the 480, 450s. So we are about $40 out of the money on the put side. So we got a lot of room to maneuver without getting hit on our short strike. Obviously, this is out in January or more than 100 days away. And then you have the 510s, 540s, we're at the 520 mark. So this one has earnings coming up. We'll probably make an adjustment to this, but we'll probably keep this on through earnings, which is same day as Meta, the 29th. That's the fun week, I guess, when Mag 7 starts to report. Now, NVIDIA hitting a new all-time high this morning, showing a little bit of doji. We got up to 195. This red line here is the options implied expected move for the week. So it kind of like hit it to the penny and backed up. Funny how that works. So we sold these for $1.91, and hard to believe we're still at $1.65, so we haven't taken half profits, but we did roll these from the Octobers, 165, 155 to the 170, 160. So we collected $1.85. They're still haven't decayed that much, but what day did we do this? Probably the 6th or 7th. Anyway, no complaints about NVIDIA, except we don't have enough calls, or we don't have any calls on this. But when I do a call play, I want a decent pullback to do that, and doing a short put play is always safer, albeit with much more limited profits. Oracle finally showing some strong action today. This was a nice kind of a bottoming tail hammer from Tuesday, and then we're starting back up again. We're still not back at the profitable level, but we did take one profit out, and we're waiting for 990, which is basically a triple, because we did take a double out of this one, and my next target is a triple. We are currently nowhere near that, if this thing is correct, but I have every faith in Oracle that will go back up and challenge these highs. And in fact, I bought some shares for myself and for clients today, given the strength that we've taken out the last few days lows. So I like Oracle for the long term. Have it in my long-term account and have it in a long-term account for our clients. So I think there's more good things to come, and finally, maybe we're through all this post nonsense in this 40% gap up day. We shall see. Palantir, we did a roll of these today. So we went from the 150, 130s in October. We went to the same ones in November. So obviously they haven't moved much, but we're up about 4%. This one wants to tag that all high, that old 190 high. And my guess is it could hit the $200 mark before earnings, which I don't know that we have a date. Do we have a date? Yeah, 11/3. So someone asked a question in the forum, do we care that they have earnings on 11/3? Yeah, we do. And I would have rolled out to the 10/31 options, but we weren't going to get enough premium to do that. So I went out to the monthlies where there's lots of open interest, lots of liquidity, and we could collect a decent premium for the roll. So that's what I decided to do. And this will be one that we will likely carry into earnings, and I will do my best to remind you about it in case you want to get out and you want to take that risk. Rigetti, some people call it rigatoni because of its symbol. Taking some nice profit targets on this one. We are still at the 855 level. If where do I have our stop here? Well, I don't have it in here, but I will. I think I've told you in the previous webinar that if it comes back to the 540 level, you want to get out. Right now it's at 855. We're at no danger of hitting this. When did we hit the 844? Yeah, I thought so. It was a couple days ago. So beautiful trade. We rolled this out. We were in the 15s, 15, 25 call spreads. We're now in the 30, 50 call spreads. So this one's looking good, but you can see we have a bit of a topping tail. Yesterday we had a doji. Today a bit of a topping tail. We couldn't quite take out yesterday's high. And funny how that happened. We got it to 48.22 today. So somebody had their finger on the sell button. Yeah, I mean, if you really want to be tight about this, you could close the rest here or close the majority of them, keep a couple around. You know, this has been a great run, and if you don't want to hold this through a multi-week pullback, which I think is coming, especially if the market wants to consolidate and pull back a little bit. If it gets down to $8, I'd take the rest of my money and wait for it to set up again. That's not an official recommendation because this is a January play. We're planning to hold this through, but in case you wanted to, an alternate way. Now, with the SPY, what we did a couple days ago on weakness is we closed out our old October 17th 555 or 655, 635 put spread. We close those out, and we close out the December 575s, and we opened a new inflection point spread. And an inflection point spread is nothing more than buying a near dated put spread or call spread and then selling a farther out of the money, farther dated put or call to finance it. Rather than put the two together, because we don't always act on them together, this time I chose, you know, the put that we did was the 575 put in January. We rolled the 575 put in December, which was part of the previous play into January, and we collected, I think, about a $1.57 for that roll. And so that $1.57 came in handy to finance the actual put spread that we bought, which is the 665, 645 put spread. So let's take a look here. So what we did is we bought a put spread for $4.34. that is the 665, 645 put spread. And then we sold the old put spread in October, the 655, 635s for $1.40. So our net cost $294. And then we also sold the short put, or we did the roll for the short put for $1.57. So we take away $1.57. So to extend our hedge out for 2 extra weeks, we paid $1.37 debit. And the reason I did that is because the 655s were basically a 20 delta. They had a 20% chance of being profitable, and I don't want a 20% chance. I want a much bigger chance. And so giving us more time gives us the opportunity to take advantage of this hedge, gives us more time to cover our portfolio. And if we take a look now, we have the 665s, which is a 40 delta. So it's almost double our chances of making money on this. And we only paid $1.37 to do essentially what was a roll of the old spread. And keeping in mind the old spread, we sold one tranche at $4.55. So we did make some money off of the other one. And now we're just kind of continuing this play to keep a hedge on our portfolio. Now tech, looking stronger than I thought it was, but here it is. Yeah, well, I guess it was a little bit even stronger this morning. So it got up to a high of 44.37. This one's been a slow mover for us. And so our next profit target was at 376. And this was something we bought for 88. So we wanted to get a double on this. And this is the November 40-45 call. So let's take a look at those. So the high on this one, make this bigger so I can see my columns and you can too. So the high today on the 40s was $5. And the high on these, so can that be right? The 45s, what was the high on the 45s? 220. So that's a $2.80. And what were we looking to get as our next profit target on tech? Yeah, we didn't quite get to 376, so we did not capture our next profit target. So we're still where we're at, and we're waiting to kind of double our money. But so far, tech hasn't done anything wrong, looking good. We will continue with this trade. Now, Target is one that we rolled today. It's kind of disappointing. It's rolling over intraday. That's a 30-minute chart. Let me just maximize this, focus on the daily chart. I think Target is bottoming, and as long as it stays above 85, we don't have much to worry about. Let me shorten this. So on the first put spread that we sold, which was the 85-75s that expired in 1 week, there was only about 21 cents left on them. So we went ahead and rolled out to the November 7th. This is before earnings, and collected $1.30. So at some point when I see some strength, and if I look at the weekly chart, you know, we're getting another doji, but if we can close a week above the prior week, then that could set a nice motion for things to start to float up again, at least up to the 50-day. If not, what do we have here? The 10, it's a Bollinger Band. What is my, too many studies here. Okay. So yeah, we could float up into the 111 level, the 50-day, before we get slammed down. in any case, one step at a time here. I'm watching this chart because I like to do something similar with Target that we did with XLP and Hormel and buy a long-term play on Target. We still own shares for clients at from around the $60 mark, although it's pulled back quite a bit. TLT, have put, it's worth 38, short put, 38 cents. We've been doing this for months and months, and we're still going sideways with TLT. Once this gets down to like a 20 to 25 cents, we'll roll this out to December and continue the game with TLT. If it doesn't want to go down, doesn't want to go up, then we can keep getting paid a little dividend on TLT as it goes sideways. Now UVXY, this is our hedge. Came very close to stopping us out yesterday, but we're down about 24%, and we'll see. We paid $1.60. No, we paid $1.10 for these. So 55 cents was our stop, or I said put 50 cents here. And we're trying to get a double on the first one, but I'll be happy with 50% profits if we get there. But again, we're not getting that volatility surge. We only have about 12 days on these, so we don't have a lot of time left on them. Is that right? We have maybe even less than that. No, we have just about a week on these, so the market to get in gear here and give us something on this low cost hedge. So at least keep me in the good graces of the SMMers, because we shared this trade with the SMMers so they could hedge their portfolios as well. XLP, final trade on the list. This is our January 2027 80 call. We're down about 6% on it. It's having a good day. Well, it's having a better day. Now we're only up a nickel. So again, selling the staples to buy the popular stocks. And at some point this will end, but I've added a couple of times to my own calls. I haven't made official calls to add to this, but I certainly, again, this is a weekly chart. Let me go back to the daily. Okay, so we're still going sideways. We can't get any oomph to the upside. We have a parabolic stop and reverse here at around 78.36. So we close above that, we could get some momentum to the upside. But this is a long-term play, and unless we lose 50% of our profits on this, we're going to keep it in play. In any case, so those are all our trades. Let me check for questions, and then we'll call it a day. Let's see what we have here. Hi, Sam. Hope you got well to Europe and your mother-in-law is recovering well. Thank you for all you do for us. Best regards from Switzerland. Patrick, thank you, Patrick. And I appreciate the kind words. And yeah, been to Switzerland once a couple of years ago when my wife was working for someone other than me. And we had a great time there as we visited some areas. I don't even remember where, but thank you for the kind words. And I'm waiting to hear. My wife was over at the hospital just now, and she just got back, so I'm waiting to hear what she has to say. But she does appear to be improving, so this is good. All right. So what do I think of race? Actually, I was looking at race today. Valat asks, hopefully I'm pronouncing that correctly. Valat. Yeah, I want to see some stabilization, but this has been we have these for clients, and we've had them for years, and this is, I think, the worst day this has had that I can remember. So I'll take you to a monthly chart. Well, that monthly chart is ugly. But apparently this momentum has been building negatively. We have cost basis in these, I think in the 30s or $40 range, because it has been bucking the typical trend of automakers being down in the dumps. Weekly chart, yeah, that's an ugly weekly chart. So look at what happened here. So I'm looking for a play here. I want to see some stabilization. So you sold the, where is that question again? Um, December 380 put for $10. Good to give yourself time. 30 delta. Um, on something like this, yeah, I mean, not a bad sale there. If I were guessing, I'm gonna go once because I'm a little bit more chicken. If I'm gonna sell a put and there's hardly any liquidity, 360, we have 434. Let's see. And December, not too bad. Widespread 380s. The 350s have 1100 open interest. Let's check. So if I were going to do a put spread, and I might put this out today, yeah, it's too wide. 610s, 830. I don't like that at all. 380s gives me, that's a 27 delta. Okay, I could live with that. 261. So what do I sell? Oh, yeah, I have a feeling I tried this before, and look at that. Now the width of the spread went from $7 to $10 bid ask. Yeah, this is something I'll probably not do in terms of a put spread. Let's look at December, see if we're doing any better. Yeah, I mean these spreads are unrealistic. I would never trade these. I would never subject you guys to something like this. So look at your 380s. And so from now, and this is not saying you did anything wrong. Um, while the stock is still selling off, you're going to have wide spreads, and you're going to see, even if you might be, the stock rallies $40, you might see a loss on your puts, even though it's going in your favor. So just be mindful of this. Open interest isn't great, and look at here we have 1100, and we got 360 to $6. But so December is the next one. No January. Open interest not there. May 26th. No liquidity whatsoever. So if I were, what, guys, I mean, these are untradeable, at least not today. And there is no open interest. And so I like race. I think that and I haven't read the news reports on it. Like I said, we already own some for clients from much, much lower levels. We probably have 1,000% if we bought these at 30 or $40. If you're interested in race, I would just buy the common shares, buy 5 shares, buy 10 shares at a time, and buy more as it goes down, because I think that you'll end up making money, but the options are just not tradable. I can't suggest any of these with the spreads that they have. And there's no open interest here. Go out to February, no interest share. Yeah, buy the common. I bought a few shares myself this morning. They're underwater, but I didn't buy them to sell them tomorrow. I bought them for a long-term account that I took advantage, but the stock was only down 13%. Now it's down about 15%. So let's see where the questions are. Answer live done. Live done. Thank you, Joe. Great session, Sam. Have a great trip. Yeah, how long I'll be here, I'm not sure, but it'll be business as usual, except when visiting or helping out. And I appreciate you guys' support and understanding. We'll get back to the lessons hopefully next week, and if not next week, the week after. But I got some good stuff in store for you guys. I appreciate you being members. I appreciate you being here and participating. And like I said, no video this weekend, but I'll be doing the normal trades and what have you, and we'll resume things normally next week. So thanks for being here. Have a great weekend, and I'll see you the other side of October 15th when I get all these returns done. Take care, guys. Appreciate it. Bye-bye. Thank you.